Now, the 50p top rate of tax for high earners is expected to be scrapped in Wednesday's budget. The Chancellor, George Osborne, asked the Revenue to find out how much money the tax raises, and is expected to be low. But Channel 4 News can reveal it may prove impossible to establish the real value of the 50p rate in its short life, because company dividend payments may have been made early, just before the new rate came in. One example is Emma Harrison, the founder of the welfare-to-work firm A4e. The timing of her dividend payments saved £800,000 in tax. Our economics editor, Faisal Islam, has this exclusive report.
The 50p tax rate is at the centre of politics this week. For some, it's a vital mechanism to ensure the rich should pay the most in cutting the deficit. For others, it's damaged the economy by undermining entrepreneurship. George Osborne wants to end this controversy by getting Her Majesty's Revenue and Customs to settle once and for all how much money the 50p rate raises. And that report will feature in the budget on Wednesday. But we can reveal that it's almost going to be impossible to calculate that number because of a series of anomalies in the way that Britain's richest paid themselves in the run-up to the 50p rate's introduction. Take the example of A4e, this Sheffield-based training company that has put thousands of jobless back to work and is currently the biggest single contractor on the Coalition's work programme. Its founder and controlling shareholder is Emma Harrison, CBE, who recently stood down as its chairman and as David Cameron's family czar. The government recently announced an independent audit of all its commercial relationships with the company. The Public Accounts Committee chair has criticised a huge multi-million-pound dividend payment to her from the company she effectively owns from April 2010. And now this programme can show that this dividend announced for 2010-11 attracted the 40p rate of tax, not the 50p. Over the last 5 years, A4e has paid out dividends from its profits, 85% of which go to Emma Harrison, reflecting her shareholding. But for 2011, a dividend of just over £10 million was paid, 4 times larger than any previous year. For the previous 4 years, the first part of the annual dividend was paid soon after the start of the tax year. But with the 2011 dividend, the largest part, £8.5 million, was paid earlier than usual, on April the 1st, 2010. That was just days before the new higher rate kicked in. So the dividend was taxed at the old 40% top rate. Independent accountants calculate that this saved Emma Harrison about £800,000 in tax on her share.
What's particularly galling in this instance is that Emma Harrison owns 85% of A4e, and that is a business that is entirely dependent on contracts it gets from the state, funded by the taxpayer, funded by you and I. She's already made a lot of money out of that. We know that she paid herself £8.6 million in a dividend for that financial year. To then bring that forward so that she doesn't have to pay the 50p tax rate and gets another £800,000 in her pocket seems to me plain greedy.
We asked Emma Harrison for a statement. Her press team said Mrs Harrison is a private individual and does not discuss her tax affairs with anyone. It should be stressed that this is perfectly legal, and there could be another reason for the seeming date change of that first dividend. But what's clear is that billions of pounds of extra dividends and bonuses were paid in March 2010 and early April 2010. Rockstar celebrities, businessmen and bankers, in a process that they call here at the Treasury forestalling. And at least some of those companies say that this was for tax reasons. We spoke to two. Hargreaves Lansdowne, the financial advisory group, paid an unusually large dividend in the first half of the 2010 tax year. According to the annual report, this was, quote, in anticipation of the increase to the top rate of income tax, while Pennon Group, which owns South West Water, paid its half-year dividend early, reflecting the interests of its large number of relatively small private investors, they told us. Leading accountants told us that this sort of tax planning cost the Exchequer £2 billion after the previous government gave a year's notice of this tax rise.
It seems to me it's perfectly legal and an inevitable consequence of those circumstances.
And was pretty widespread?
Well, it's predictable and widespread. I mean, on the numbers I've looked at, it's anything between 18 and 20 billion pounds worth of income, I believe, was brought forward into the tax year 9-10 under the old tax rate. That's an enormous amount of money.
Saving
about £2 billion worth of tax. My guess is that HMRC are going to find it extremely difficult to come up with any sort of precise numbers about how much the 50% tax rate actually yields.
The super rich have accounting opportunities that mean the 50p rate was never going to work like a standard issue 40p or 20p tax rate. But what's clear is that there have been significant distortions in the tax take over the past year. In January 2011, billions of pounds of extra payments were paid. And in January of this year, billions of pounds less were paid. So the question, how can the Chancellor tell how much the 50p rate has raised? It does look like the 50p rate is for the chop this week after 1 year's heavily distorted data. Because of the legal taking of bonuses and dividends in March and April 2010, we may never know how much it actually might have raised from the very wealthy to contribute to paying Britain's debts.